So a lot's happened in the last few weeks since our last investment committee. Three things in particular. The first is the CPI index, or the consumer price index, came in a little bit lower than the Wall Street expectations. And essentially what that meant was that inflation may be coming in, which is a good thing from the Federal Reserve's perspective. And that's quite bullish for markets, at least in the near term. Inflation's reared its head over the last couple of years, and the Fed's had to raise interest rates to pretty unprecedented levels at a rate they haven't seen in decades in order to fight that inflation, in order to, in some ways, destroy enough demand to have prices start to stall out and eventually come in, to get inflation closer to its 2% long-term goal. Inflation right now is still running at the 3% plus level year over year. So inflation, or CPI, coming in slightly lower than estimates for October was a good thing for markets. So it leads me to the second thing that happened, which was markets really took off on that announcement. Not the least of which was the Russell 2000 index. Now, this is an index that represents the small and mid-cap size companies in the US. And small and mid-sized companies are interesting leading indicators for the broader market. They tend to lead the market both into bull markets and bear markets. Small and more illiquid companies that are more in the far corners of the US economy tend to be quite representative, in many cases more representative of the US economy than larger companies. If you think about the Metas and Microsofts and Googles, they're multinational behemoths. They have business all over the world. There's a lot of moving pieces, a lot of noise that can cover up what's happening under the surface in the US with the consumer. So when the small cap index ripped on that CPI announcement, a lot of people saw that as evidence that the markets were going to take off through the end of the year. We're going to get this colloquial Santa Claus rally that people know about or often talk about heading into December. Our hot take is that the small and mid-cap stocks may actually not be a reflection that we're entering some new bull regime. From my perspective, a lot of small and mid-cap stocks have been beaten down so much because there was very bearish sentiment around true fundamentals for these companies. If you think about back to the Silicon Valley banking crisis in March, a lot of the ramifications or possible contagion of that crisis could affect small and mid-sized regional banks, especially those that do a lot of commercial real estate lending. And so fundamental investors had been in many ways betting against small and mid-cap companies. Huge short positions on, high short interest in these companies. So at the first sign of relatively good news, a lot of those investors went out and covered those short positions. They had to go buy back the stock they had borrowed to eventually effectively get out of those positions. And we think that's why you saw the Russell 2000 gain the largest one-day percentage gain I think it's seen since the depth of the pandemic. So TLDR there is it's important not to read too much into it. Of course, stepping back, the third thing I want to mention is we are incrementally more constructive on markets, especially through the end of the year, as a result of those first two components. So I talked about the CPI, inflation coming in, which is a good thing for markets. I talked about the technicals and the Russell 2000 breaking and leading the market higher. That is also, on balance, a good thing. And for us, what that meant was we made some pretty broad sweeping changes across all three equity strategies: flagship, opportunities, and offshore. We added net exposure, which meant we took some of the strategic cash we had been holding and we deployed that. We initiated in some new names, in particular in the opportunity strategy. We added to a handful of existing names, especially in flagship, especially on the large cap tech side. We also took an opportunity to trim some of our energy exposure across both opportunities and offshore. Remember, energy has been a massive beneficiary and winner for us year to date, but we think a lot of these names may be getting a little bit overextended, so we took an opportunity to pare back energy. So it was a pretty broad sweeping set of changes, added net exposure overall, trimmed in some places like energy, added and initiated new positions in opportunities in particular. And as we look forward to the end of the year, we do think there's a lot to be optimistic about. Again, tons of cash sitting on the sidelines, especially in money market funds, a lot of bearish sentiment and positioning. And so, to some extent, a little bit of good news is all the market needs to continue to power higher. Now, we don't think we're out of the woods yet. 1 month or 1 quarter of data does not make a year, does not make a decade. And so the Federal Reserve made it very clear they're going to stay data dependent. Inflation could come in above expectations next month. And as a result, they may actually need to hike interest rates again, at least one more time. So they didn't take that off the table. So we're not out of the woods completely, but a lot to be excited about, and we think optimistic about heading into the end of the year. Last thing I want to mention, we sent around some updates recently on smart cash. We took a look at municipal bond funds, a really interesting corner of the market. Lots of interesting tax advantages with those funds. We're not going to add those to smart cash for now, and we sent a note around why, so we'd encourage you to check that out. And we're also paying attention to a lot of the stuff hitting headlines. We know the OpenAI management fiasco that's going on is obviously something everyone's talking about. We do own a position in Microsoft in Flagship, and so OpenAI's relationship with Microsoft is important to monitor. So we're keeping tabs on these sorts of things, but overall, it was a pretty busy couple weeks. I'm sure there'll be a lot of more events to come through the end of the year. If you have questions about these or anything else, just give us a shout.